I'm going to introduce you. I'm going to introduce you now to the Global Mortgage.
Thank you, Emma. Thank you. Good morning, everyone. And we're very happy to be here today with you because I think when Wem and I were talking about questions or hey, can you do this, or what's happening with the financing world or with financing options here for foreigners in Mexico. And well, we've been working a lot with Ronival for the past 2 years, but of course there's a lot of questions and there's a lot of situations where financing is more complicated than others. So the idea of this training or this meeting is to try to reduce those questions. And of course, we are always going to find new questions, but the idea is to get each other a better communication so we can answer that questions with in a correct manner, or if we don't know the answer, then we can find it out. So I'm going to share my screen. I have the presentation here. Just wait, give me a second. Just wait a second. Wait. Okay. Pantalla. And now, can you see the screen? Excellent. Now, the first and I'm not going to take a lot. The first thing that I would like to share with you is that we are changing, or we are rebranding our name. We are going to change the name of Moxie, but we are going to be a global mortgage company. This is one of the major changes that we are doing this year. And this is because of the whole evolution that the company has had for the past year and a half. So from now on, we'll be Moxie. That's our new name. This is going to be a change that is eventually going to be reduced just to Moxie, and we are going to remove Global Mortgage Company. This doesn't affect anything we're doing. This doesn't affect anything about us. We are continue working the same, but we are rebranding our company, which we believe is the right time to do it, because we are expanding, we are growing. We're not just in Los Cabos, we are in several areas of Mexico, and you will see it throughout the presentation. So this is the team. In global, we are right now over 25 people at the company, and together we have over 200 years of experience in lending in both sides of the border. It's very important for you to know that we are the lender. We are not a broker. That's very important, and that's very it takes a very important role in the financing right now, because we are not a broker. We have the funds, we have all the process to do this kind of financing, because we are six companies in the whole group, 4 in Mexico, which are to securely lend and transfer property here. And 1 Mexican company has a regulated and audited bank license in Mexico. And the other 2 companies are in the US. Those are to service in our loans in dollars. All of our loans are in dollars, and report mortgage interest to the IRS. So this is the kind of a structure we have. So this is very important for you to know, that we are a lender. We are a regulated company in Mexico and the United States. And this is the team with our CEO and the rest of the leadership team, along with our rest of the team together, that we have more than 200 years of lending experience. These are some important facts that I think you already know about this. There is a lot of people moving to places where they have a different kind of life, and Los Cabos is one of them, and other areas of Mexico. So we are expecting to have a lot of people moving to Mexico, and because we have over 28 million in visitors every year in Mexico, 173 million of international immigrants between the age of 25 to 59. So there's a lot of opportunity for Mexico, for the tourist market in the coming year. So this is just important facts. And that right now with our program or with our mortgage, they could get access to a better financing, which we'll go over in a few minutes. Okay. This is what we do. Okay. And I know there's going to be a lot of questions, hopefully. But what I would like you to see here is that our financing is fully amortized. That means that we have long terms. We have terms for 15, 20, and 25 years. I think that's one of the key points and important points of having financing, that it's a long term. We have no short terms like 5 years, 10 years, or balloon payments with amortizations over 30 years and balloon payments at the 7-year or the 10-year. No, this is fully amortized. I think that's one of the key points in our program. It's fully amortized. Long term, we have fixed rates for the whole term. Once we define the term, the interest rate for the client and we close, it's fixed. And there is no prepayment penalties. That's another key point in a mortgage. That your clients can pay it off at any time, and there won't be no penalties if they do it. So these are 2 points or 3 important key points on a mortgage: long terms, fixed rates, and no prepayment penalties. Now, what can we do in terms of our loan characteristics? We have a minimum loan amount of $100,000. That's the minimum, okay? And the maximum is $2.5 million. But case by case, we can go up to $5 million per client if it's necessary. But that's case by case. And of course, case by case means that we need to identify a client with a great FICO score, an amazing FICO score, and with the income enough to qualify for a $5 million mortgage. Okay. Now, the maximum loan to value that we can do is 65%. So that $100,000 should be at least the 65% of a loan. That's like the minimum. So that means that we're looking at properties starting somewhere around 165 purchase price and beyond. So whenever you have a property that their value or their purchase price is somewhere around 165, and if we apply that 65%, that we're going to go for $100,000 loan. So that's when we can start looking at properties. If we have a property of $130,000, we cannot do it. 150, we cannot do it. So let's start looking properties at 165 and beyond, okay? So that's the maximum loan to value we can do. And we have an option for clients who would like to apply for it, so that we can do an extra 5% that could be used for closing cost, okay? So we can do up to 70%, but for that 70% will be 65 applies to the purchase price and another 5% for closing costs. Because as you know, every real estate transaction in Mexico should consider the purchase price plus the closing costs. Because closing costs, it's an important part that they need to pay. It cannot be included into the purchase price, or sometimes could be included into the purchase price. And sometimes it could be included in the financing. But that's why we need to address that it's 65% for the purchase price and another 5% if the clients qualify and they want it, that can be used towards closing costs. Okay. Now, our rates. And here is an important part, because we just dropped our rates. We used to have a range of rates starting at 7 3/4, 7 and 75 to 11 and 80. Those rates that we used to have last year are very common for the Mexican market, okay? If you go to a Mexican bank and ask for, I want to get a mortgage or I want to apply for a mortgage via property in Los Cabos, Mexican banks are going to lend you up somewhere around 8, 9, 10%. That's very common in Mexico. But the Mexican banks are not lending to foreigners, especially if they don't have any income or credit in Mexico. So most of your clients that they are coming to Cabo to have a second home and they have their income and their credit not in Mexico, Mexican banks won't lend to those clients, okay? So forget about Mexican banks, that it's very complicated for you to go with them and get a mortgage for your clients. Now, and this is just to put a little bit of basics or base on the rates that we used to have. We used to have rates between 7.75 to 11.80. But because we have done very well, our investors decided to, okay, let's reduce our rates because the market is asking for a better rates. And right now we have the room, or we have what is necessary to reduce our rates. That's why we did a significant reduction in our rates. Right now, the range of our rates are starting at 6 to 8%, okay? And any Mexican bank or any other financing option in the market can offer you these rates, especially on a long term, which is 15, 20, or 25 years, fixed and with no prepayment penalty. So I can say right now that we are Moxie have the best mortgage rates in the market right now. So this range between 6 and 8 is where your clients are going to end. And what happened, or how did you determine those rates? With the FICO score, because as you can see here, our minimum FICO score is 680. That's the minimum FICO score. And what we do to determine the FICO score? Of course, we pull credit and we take the middle one. Of course, you know that we have Experian, Equifax, and TransUnion. Those are the 3 companies that qualifies credit in the US. So we use the middle one. If the middle one has 680, that's when that's when your clients could potentially have a financing option with us. So I would say that that's the first question that you could ask to your clients whenever you are facing them, whenever you are talking to them, whenever you are interviewing about, what do you want to buy? Oh, I want to buy in Los Barriles, or I want to buy in the East Cape, or I want to buy in Cabo. Oh, and what's your budget? Well, my budget is $200,000. Oh, and it happens to know that, you know, what's your FICO score? Or you have any idea of your FICO score? Yes, it's 740. Oh, well, that will immediately give you an opportunity and an idea of this client could get financing. So instead of just looking at properties at $200,000, let's take them to properties to somewhere around $400,000 or $500,000, because we can use that budget for the down payment and closing costs. And we at Moxie, we can finance the rest. And you can only do that, or you can do that by just asking that question and start talking to us. Hey, Mary, Pablo, I have a client that I just talked to. He said, or they're saying that they have a FICO score over 740. Can you help us to make sure that it's true and that we can pre-qualify them? Yes, let's talk about it. So having these rates right now, it's a key point, and it's an important point, because we have seen, since we are announcing this new rates, an increment in our loan applications. So make sure that these rates will help us to have more traction in our volume, and we are here to help. So this is about what we do, how we do it. This is our loan characteristics. And of course, we're going to have questions at the end, but here is like the major changes we have done in our program, and that right now there's financing available. Okay, let's move forward, because as you know, there's a lot of new construction in Cabo, And I'm pretty sure that will be the same eventually in the area where you are, which is La Ribera, which is Los Barriles, which is the Eastgate. Because right now we are running out of options in Cabo. There's land is the land is too expensive, and of course investors are looking for other options besides Cabo, and there will be new construction available in the coming future. So what we can do with our new construction or with new developments is that normally developers or builders are asking for initial deposit, and that initial deposit is somewhere around 30 to 40%, right? When you sign the contract. And then they are asking for payments during construction, like another 30 or 40%. So that will leave us to a 70 or 80% of payments or the total balance of the purchase price. So what we can do at Moxie is that at closing, we can pay the balance to the builder or to the developer, and we can reimburse to the borrower or to the buyer up to 65%. It says he's 60, but no, we can do up to 65% of the purchase price. So they will pay the balance to the seller, and they can get a reimbursement up to a total of 65% of the purchase price. And they can do whatever they want with that fund or with that money. So they can use it to furniture the unit, or they can use it to buy something else as an investment. And you can see it here with the numbers. Numbers are very simple to understand. We have a purchase price of $1.25 million, an initial deposit to the seller, which is $500,000, and then payments during construction of $375,000. And then at closing, Moxie will pay the balance to the seller, and we can reimburse what the borrower pays during construction at closing. So they can use that $375,000 for closing costs, for furniture, or to buy something else. It's up to them, and it's up to you as well. So you have an opportunity there to probably introduce your clients with another investment option or an investment opportunity. Okay. This is how we can work on a new construction. Now, Mary, can you go in and talk about what can we do in terms of co-marketing and listing flyers, please?
I don't think this is actually relevant because these people are our clients on this call.
Okay, perfect.
So we really just need to focus on the end product and what that delivers to clients. So
excellent.
Yeah.
Excellent. Thank you. Well, this is the same. This is our program is creating to accelerate sales cycle to buyers purchasing at higher price points, and of course attract new buyers who were previously unwilling to consider purchase without financing. And these are our pricing, a little bit of our pricing highlights. We work under an approved fideicomiso de garantía. Of course, all our programs, they have no rate adjustments, no balloons, no fixed risk, and no IVA, because all of this is granted in the US, or the loan is granted in the US. And it's done in dollars, and it's serviced in the US, so we have no IVA on tax and loan cost. As loans are funded and serviced in dollars by a US sub-servicer. All interest paid is reported to the IRS, so this is very important as well, with the potential of a tax deductibility, okay? So all the interest that you're paying with the mortgage, you can deduct it, or you can write it off if you want it, if there is, and it is possible in the US. So that can also be an extra incentive of having or using our financing, okay? And of course, there is a treaty against double taxation between US and Mexico. So you don't have to pay taxes in Mexico and in the US. You're only paying in the US. And partnerships, of course, all our loans are in our payments. We are taking care of the fideicomiso fees and the taxes fees, okay? And about eligible borrowers, we are only working for the moment with US citizens. That's all we can do right now. They must have a valid FICO score and file US taxes, and of course, a valid US passport. And some sort of our underwriting guidelines says our 38% max DTI. That's the maximum we can do, 38%. We have a policy or a philosophy for underwriting that makes sense. If something makes sense, we will do it. Okay, so we have several ways of, we are not on strict underwriting philosophy. We have a generous asset depletion policy, which is another option to qualify. And we also have the possibility of doing a bank statement, which it's an all doc qualification. The collateral, or what we call the guarantee, is units that are condos, single family residences, or properties which have up to 2 to 4 units. Okay, that's the maximum we can do. Like there are several properties which have a lot of bedrooms or a lot of separate units, so we can approve up to 2 to 4. That's the maximum. And I know there are going to be a lot of questions about this. Title insurance is required, and we'll go over details in a minute. And about vesting the title on the property, we can use an LLC. It's approved to do that. A trust, a corporation, or an individual. We cannot do it with Mexican corporations. We can only do it with US LLCs, trust corporations, or of course, individual. A POA is required because that's very important, because if your buyer or seller could attend to closing, but we have seen in the past that there might be some problems coming for closing. So that's why we are always asking for a POA from the very beginning. So we cannot, so that way we won't delay the closing at some point if it's necessary. And of course, all this documentation must be notarized and apostilled. And we have a company to take care of that, to get all the documents notarized and apostilled in the US. This is about the different options that are in the market, where I'm going to talk about this. And that's it. This is where we are. We have presence right now. We are in Rosarito, Ensenada, Puerto Peñasco, Loreto, all the Baja. We have presence in Mazatlan as well, Lake Chapala, Puerto Vallarta, Punta Mita, San Miguel de Allende, and we have some inquiries in Monterrey, Mexico City, and of course we are starting to look at Cancun and Playa del Carmen. And an important fact here is that in 2019, Global Mortgage, in that time, right now we're Moxie, we invested over $1 million in legal expense to ensure that our document set, including the Fideicomiso de Garantía, provides the ultimate security and ownership protection to our clients. So that's an important fact, because expending that amount of money, it makes security and confidence to our investors and to our clients. And that's it. That's what we are going to talk about you today, about our rates, what we do, and bring in some questions. I'll stop sharing my screen, Emma.
Thank you very much. That's incredibly interesting and useful. So guys, if you have a question, you can either physically raise your hand, or you can raise your hand on the, you'll see reactions at the bottom of the screen, and you can pop up your hand there. But does anybody have a question to kick off? I mean, I've got a few, but this is your event, so please feel free to ask a question. I'm looking around, trying to see everybody. There's quite a lot of people on here. Dee Dee Bacon.
Okay, can you hear me?
Yes.
Okay. What about writing off the interest in Mexico if you're an income earner for hacienda? Can you write the interest rate, mortgage interest rate off, use it as a deduction against your income?
Well, good question, because we need to have income from the US in order to qualify. So okay, that answers pretty much the question. Yep. And eventually, if you're moving all the way to Mexico, or you're moving permanent to Mexico, I think you will have an option to decide either you wanted to write off the interest in the US or in Mexico. But as when you are starting or when you are qualifying for a mortgage, then we need to use your US income and your credit. So from the very beginning, you will have to write off those interests in the US.
Okay, thank you.
You're welcome.
Pablo, basically, I wanted to ask about pre-construction because the way that Los Barriles and the East Cape is moving is that there is no inventory. And with interest rates as they are, with inflation, people are looking for places to put money. And obviously real estate is a good move in that respect. So we can't really see anything slowing down for the foreseeable future. However, there is no inventory. So what we're now seeing is pre-construction projects coming in. However, how do you make yourselves confident that the developer is going to be credible? So I guess you just can't lend to anybody and say, okay, get a mortgage on that house that's going to be built in a year to, I don't know, Mr. Gonzalez who's building it. How do you know Mr. Gonzalez is credible?
Yeah, that's an excellent question because we don't know if they are going to if they're going to really deliver. I mean, unless we qualify the builder and they have some sort of credit against their construction. But the way we're structured right now, we need to wait until construction is complete. That's for sure. But what can we do is to like pre-approving the development. And of course, I'm not going to lend to the builder, but what I can do is to ask for the title and to check all the previous transactions and make sure that everything is legally correct. And we can talk with the builder so we can know who they are and their experience. And because we have done this in Cabo before with some developments, we have go and talk to them. We have seen their legal structure. If it's a Mexican company or if it's an individual, of course, it's better to be a Mexican company because builders normally are Mexican companies, or they can be individuals. But of course, it makes more sense that a Mexican company is building and not an individual. But what can we do is try to pre-approve that development or that construction by doing a legal review on the title for the builder and trying to know more about the previous constructions or the previous projects from the builder. That's something that we can do for new construction or for the builder. What we can do for the buyer is that we can approve them. They can be approved and wait until construction is complete. And of course, we will have to reapprove them again before construction is complete so we can do the actual closing. But they can have the certainty that if they are approved and they continue with the same income and they continue with the same FICO, they will eventually have their loan or their financing available. And they also be certain about that prior to fund the loan, we have to do a new title search on the property and that we're doing an appraisal on the property. So we'll know for sure that all the legal information is correct and that at least the purchase price is the value that it's on the market on the property they're buying.
Can I add just something to that as well, Emma? I don't believe we went through this in the presentation. If you have existing homeowners that are looking to invest into the construction that's happening in your area, we can look at doing a cash out refinance for them as well on their home to help them come up with the funds to do these payments through the construction. And then of course, look again at the last portion of that construction costs. But that's an option that's available too. It's a 60% loan to value and all the terms and pricing are the same.
Are the same. That is correct. It's an excellent point, Mary. Thank you. Yes, we can, any existing homeowners, they have free and clear properties, or even if they want to refinance, we can do it. But if it's free and clear, we can do this cash out for them and they can invest or they can do whatever they want with the funds. And that's an option. Yeah, it's up to 60% loan to value for the current value today.
And also with the cash out refinance, there is because realtors aren't making any money on that, we do pay out a referral fee on the cash out refi.
Not sure the people here care about that. Yeah. Okay, that's really good to know. So people, but obviously it's houses in Mexico. You're not dealing with US homes and getting the cash out. It's just
No,
Mexican.
just Mexico, which it wasn't an option in the past. That's why pretty much all the people were paying cash, because there was no real financing options in Mexico before. There used to be, but not for the last 8 years. So right now, all these existing homeowners in the past, they can leverage their properties right now because their investment is sitting there. The money is stuck there. It's not moving there because there was no financing option right now. So they can leverage their properties. They can get up to 60% of the current value, and they can invest it, or they can do whatever they want with the funds today.
So how long is there a minimum term? So if they did that for a year, would that be okay?
It's 15, 20, and 25 years. The rates are the same. The way to qualify is the same. We will use their US income and credit, and it will be pretty much as you were buying, but we are taking, we're doing a cash out.
And no prepayment, early payment penalty?
No prepayment penalties at all.
Has anybody else got any other questions? Or, I mean, it was incredible. Yeah, Mickey, here you go.
Hi, thank you. I just wanted to make sure I'm understanding this correctly. So I am about to buy a piece of property in Los Barriles and want to build on it. And I just wanted to make sure I'm understanding. I took a screenshot of the slide. I wanted to make sure I understand how much of the, like let's say for round numbers that the cost of construction, setting aside the cost of the land, let's say the cost of construction was like $1 million. Mm-hmm. And assuming we otherwise qualify for all of the other things, am I understanding correctly that we would need to basically have 70% of that in order to start construction, to pay the 40% down, another 30% to the builder, and that would get the construction process started, and then we could access the final 30% to pay the builder from the mortgage, and then be reimbursed for an additional 30%. So out of pocket, we would have to come up with 70% to start, and then we would be financed back to 60% theoretically, like if we were trying to get the maximum mortgage. And then do you consider the value of the land when you're talking about the overall value? If you come in owning the land but then want to finance the construction, what is the 60% value of?
It's for the purchase price, because it's different. You're right. The land, the price of the land and the price of the construction is completely different. That is going to be the final purchase price. So we're not using the land, the value of the land, or the construction. We're using the purchase price or the commercial value of the property. That's what we are loan against.
Okay.
That's what we use to set up this 60% or 65% maximum loan to value.
So they do like an as-built, as complete appraisal? Is that the
Yes.
That's what we call it in the US? Like
Yes.
And are there? This may be a silly question, but are there do you use like licensed appraisals in Mexico?
Yes.
Or do you all determine that value?
No.
Okay.
That's an excellent question, because all of our appraisals are certified.
Yeah.
We are a certified Mexican company. We need to have certified process, and the appraisal is one of them. So we use certified appraisers.
So we submit like the plans and specs of what we're planning to build, along with the information on the builder, and then they take that information and project what the value will be to like pre-qualify the loan, essentially.
Yeah, we can do that. Yes, there's this like projected appraisals that are not built yet, or property projects that are not built yet, and we have, of course, we need to talk about this with the appraiser, but yes, eventually we can have this sort of projected appraisals. And whenever, and because we know, like you were saying, all the plans and the construction process and the construction budget, so the appraisals can take that and consider that as a projected value once already built. So yeah, that could be another option as well, to determine the commercial value or the appraisal value of a project that is not built yet.
Thank you.
You're welcome.
Anyone else got a question? Oh, we're going to share the details for Pablo anyway after this. So if you have individual questions to ask him, then feel free to reach out to him. But otherwise, I think, yeah, that was excellent, and it's so good to hear it from the horse's mouth and not hear it from the grapevine. So yeah, thank you so much, guys. And if everybody's happy, then I guess we'll end the session now, and we will follow up with contact details and also a reduced version of that presentation that you just saw.
Yes.
And equally, you can always come to see us or give us a call if you have questions about buying or selling as well.
Emma?
Yes.
Yeah, this is Dennis Biggs. I have one quick question. I may have missed it. Hi, Didi.
Hi.
The rates vary between 6 and 8%. Is that based on FICO score?
Yes, it's based on the FICO score, loan to value, and loan amount. So whenever we are working with those details, or whenever we have more idea of those details, that's when we can determine the rate. So those are the factors that will decide the interest rate or the final and fixed rate at the end.
And then I saw on your slide, you also have an origination rate of another 2.9%?
Yes, that's just for the loan amount. Yeah, that's our part of our cost or for financing.
Okay, thank you.
You're welcome.
Okay, guys, thank you so much. We're going to do this again. Next time it's going to be on capital gains. So make sure you check into that, because it's absolutely key. And again, there's no one answer for capital gains. So yeah, that's going to be a really good event. But Mary and Pablo, thank you so much. And we'll see you soon. Okay,
Thank you, Emma.
bye.
Have a
Thank
nice
you.
day,
Bye.
everyone. Bye.